Hey guys, welcome to another one of our Squirrel monthly updates. I guess the big thing for everyone at the moment is mortgage rates. And so let's start there. Official cash rate today is 3.5%. The next announcement coming out of the Reserve Bank is going to be on the 23rd of November. The market's pretty much pricing in a 0.75% increase, which would take the OCR up to 4.25%. From my perspective, maybe I'm a bit optimistic, but I think 0.5%, and I think we'll see them settle at 4%. My rationale for that is that we've had such heavy increases through to the end of this year that the Reserve Bank will want to just see what happens as a result of the increases that I've already put through before they get too aggressive. But who knows, right? It could be completely wrong. Either way, look, it's already priced into the market, so wholesale interest rates, which determine mortgage rates, have largely picked this up in terms of a pretty aggressive Reserve Bank increasing rates. And that was off the back of higher than expected inflation. If we look at overseas, the Fed Reserve increased their rates by 0.75%. They're up to a range of 3.75 to 4% now, which is high. That's what's keeping the New Zealand dollar low at the moment, is that everyone goes to US dollars when they're nervous, and US dollars are paying a pretty compelling interest rate, so it's kind of a double whammy. In Australia, the Reserve Bank in Australia just increased their rate only by 0.25%. The Reserve Bank in Australia seems to be a little bit more conservative and a little bit more circumspect around understanding the implications of increasing rates on the Australian economy before they hike too fast. So they could come under criticism for being too slow, or maybe next year they will get a lot of kudos for being slow and a little bit more methodical around it. But their rate now is 2.85. If we increase to 4% or 4.25%, we're quite far ahead of the Australians. But in my mind, I quite like the Australian approach, to be honest, because we've had such a massive spike in rates here. I'd like to think that we'll take a bit of a breather and understand the implications of that before we just keep rushing into hiking rates. Look, the big news would be that I genuinely still don't expect to see mortgage rates move too far from where they are at the moment. I sort of always said that I was expecting rates to peak 5.5 to 6. Look, I'm probably a bit too optimistic on that now. We've got 1-year rates out there at 5.99%, so they could go a little bit higher, but I'm not expecting them to go a whole lot higher. So in the short term, we could see rates up around 6.5ish, but I think it won't last that long, and we'll expect to see these rates settle down around sort of 5.5 to 6. So you're going to get some rhetoric out there about increasing OCR, but just remember that any increases in the OCR have largely been fully priced into mortgage rates already. So whilst they will go up, potentially in the short term, we really are close to the peak rates. As far as the housing market's concerned, probably not a lot to report there that you don't see yourselves in the media. Barfoot's just came out overnight saying that they had their weakest October sales since 2010. Look, that's not surprising. Volumes are down, house prices are down, but equally there's still not a lot of stock out there. So price reductions take a good 3, 4, 5 months to flow through into the market statistics. So although everyone's talking about house prices continuing to fall until early next year, the reality is that the prices have already fallen. It's just going to take them 3 or 4 months to report it. It doesn't change the fact that there's a lack of good stock in the market. So, in my mind, now's a good time to be in the market trying to buy and get a good deal. Obviously, if you can afford it, and if you can get a loan in the current environment with really high servicing rates. That's probably it from me for this month. I'll talk to you again next time. Cheers.